Hello everyone, welcome back to upGrowth. A lending business starts the year spending 1 lakh a month on Google Ads. At rupees 800 per lead, by month 12 the same budget is generating 205 leads at rupees 486 per lead and rupees 8 lakh in monthly revenue without increasing the budget once. So this simulator shows you how that happens month by month. This is a fintech performance marketing simulator by upGrowth. It is built specifically for fintech businesses like lending, insurance, and payments, and accounts for how CPL improves as campaigns mature, how compliance levels affect efficiency, and what your real 12-month revenue looks like once you factor all of that in. So, a few inputs of your current setup, and you get your full year forecast with a monthly breakdown. So, we have 7 inputs to be entered. Let us go through each one. First, set your currency to INR or USD. Then, as monthly ad spend is your paid marketing budget each month. The minimum is 50,000 for a meaningful fintech projections. I have entered 10,000. Sorry, 1 lakh. And segment is your fintech category. Each segment carries its own CPL benchmark. Select from the drop down here. And primary platform is where your ads will run, like Google Ads. Select from the drop down here again. I've selected Google Ads here, which is the tool marks as the best platform for lending and insurance because of high intent search behavior. And current CPL is your cost per lead today. I've entered rupees 800, which matches the lending benchmark, and lead to customer CVR is the percentage of leads that convert into paying customers. For a lending business, this converts the full journey from lead to loan application to dispersal. And customer LTV is the lifetime value of a single customer, how much revenue that customer generates for your business over their full relationship with you. I have entered 50,000. And the last input, complaints level, reflects how well your ad creatives and landing pages meet fintech regulatory standards. I've selected basic here. We have other options like full and advanced. So I've selected basic here, which applies a 15% efficiency adjustment to your CPL, meaning your starting effective CPL will be slightly lower than the benchmark as the tool accounts for basic complaints quality. Now let's hit on calculate projection. So here is the results. The year end CPL is rupees 486, and the cost per lead drops from 680 in January to rupees 486 by December. That is a 3% monthly optimization improvement that the simulator applies progressively as campaigns mature and quality scores improve over the year. And annual revenue is 80 lakh 50,000, the total revenue generated from converted leads over 12 months. And next is LTV is to CAC ratio, that is 102.88 to 1. The target benchmark is 3 to 1 or higher at 102.88 to 1. This is an exceptionally strong ratio, meaning for every rupee you spend acquiring a customer, you earn back rupees 102 over their lifetime. And the key insight confirms this: the segment is highly profitable and there is room to scale aggressively or test additional platforms. It also notes that upgrading your compliance level could improve efficiency by a further 25%. And here we have 12 month CPL optimization and revenue growth chart showing two lines. CPL goes down from rupees 680 in January to rupees 486 in December. Cumulative revenue climbs steadily upward from 5 lakh 50,000 in month 1 to 80 lakh 50,000 by year end. The two lines cross around mid year, that is a visual confirmation of the payoff compounding beyond the cost of acquisition. And the monthly breakdown table gives you the full picture. Every month shows your spend, CPL, leads generated, customers required, and revenue. In January you get 147 leads and 11 customers. By June that grows to 171 leads to 13 customers. By December you are at 205 leads and 16 customer per month, all from the same 1 lakh budget, because your CPL keeps dropping as the account optimizes. So, fintech performance marketing is different from other categories. Regulatory constraints affect which claims you can make in your ads, which platforms deliver the best quality leads, and how long it takes for campaigns to stabilize. A generic return on ad spend simulator does not account for any of that. The simulator is built around fintech specific mechanics, CPL benchmarks by segment, compliance efficiency adjustments, and the compound effect of monthly optimization on lead volume and revenue. The result is a projection you can actually present in a budget meeting because it is grounded in how fintech campaigns actually work in the Indian market. So run this with your own CPL and LTV before your next planning cycle. The link is in the description. And if you want Upgrowth to help you build and optimize a fintech performance marketing strategy, here there is a book free strategy call button. Get in touch with us. We can help you out. Thank you.